This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Thermal coal imports into China, Japan and South Korea, three of the world's largest coal users, hit their highest combined total in 16 months in December as the North Asian manufacturing powerhouses primed their economies for growth in 2023. Economic momentum in these countries, which collectively accounted for nearly half of all thermal coal imports in 2021, was subdued in 2022 as China's strict zero-COVID measures stifled industrial activity across the world's largest manufacturing base. Japan and South Korea have extensive supply chain ties with China, which meant that each country suffered slowdowns in both productivity and demand growth in 2022 as China's COVID-19 curbs stifled movement of goods and people over much of the year.
Oil slipped on Wednesday, adding to a decline in the previous session, as a rise in U.S. crude inventories and global recession worries edged out optimism for a demand recovery in China. Crude has rallied in 2023, with global benchmark Brent crude topping $89 a barrel this week for the first time since early December, on the ending of China's COVID controls and hopes that the rise in U.S. interest rates will soon taper off. Whether or not oil prices can resume their march higher will depend on how quickly China's crude demand bounces back this quarter, said Stephen Brennick of oil broker PVM.
Moving on to the top news in the energy sector.
The Biden administration has granted a license to Trinidad and Tobago to develop a major gas field located in Venezuelan territorial waters, U.S. and Trinidad officials said on Tuesday, marking a further easing of some sanctions on Venezuela. The license, issued by the U.S. Treasury Department at Trinidad's request and intended to enhance Caribbean regional energy security, means the island nation can do business related to the Dragon gas field with Venezuela's heavily sanctioned state-run oil company PDVSA. Prime Minister Keith Rowley, speaking at a news conference in Port of Spain, said Trinidad expects to gain access to 350 million cubic feet of gas per day from the Dragon field.
India's Federal Power Ministry has proposed allowing some power financing companies to issue tax-paid green bonds to raise cheaper finance for lending to clean projects, three government sources said on Wednesday. Power Finance Corp, PFC, REC Limited, and Indian Renewable Energy Development Agency, IREDA, could raise funds through tax-paid bonds, where the issuer pays for it instead of the investor, typically getting higher returns on investment, three officials who did not want to be named as discussions were private, said. India is looking to increase the pool of investors to achieve 500 gigawatts of non-fossil fuel energy by 2030 and become a zero-carbon emitting nation by 2070.
Next, we have the top news in metal markets.
Copper prices edged lower for a second day on Wednesday, weighed down by a stronger dollar and the absence of China, the biggest consumer, where markets are closed for a week-long Lunar New Year holiday. Copper rallied strongly in early January, reaching a 7-month high of $9,550.50 a ton on January 18, as the dollar weakened and speculators bet that the end of China's COVID-19 restrictions would boost economic growth and metals demand. But prices lost momentum as Chinese markets closed on January 20.
Gold prices slipped on Wednesday from a 9-month peak hit in the previous session as the dollar steadied and investors squared positions ahead of U.S. fourth-quarter economic growth figures. Spot gold was down 0.6% to $1,925.02 per ounce at 11:52 GMT, after hitting its highest since late April on Tuesday. U.S. gold futures dropped 0.5% to $1,926.30. The U.S. Commerce Department is expected to unveil its initial advance fourth-quarter GDP estimates on Thursday, which could set the tone for the Federal Reserve's January 31 Feb. 1 policy meeting. We will now look at the top news in the agricultural. Malaysian palm oil futures posted their biggest loss in over 6 weeks on Wednesday, in the first trading day after Lunar New Year holidays, tracking weakness in U.S. soy oil and as lower export volumes weighed. The benchmark palm oil contract for April delivery on the Bursa Malaysia Derivatives Exchange fell 3.57% to 3,753 ringgit per ton by afternoon closing, its worst day since December 12. The Malaysian exchange was closed on Monday and Tuesday for the Lunar New Year holidays.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.